Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com.
Welcome back to Golden Rule Radio.
And?
I'm getting there. I'm getting there. You guys are interrupting me. You interrupted me.
Yeah. And?
Gold is pulled back from last week a little bit, currently around 1770. The spot price of silver is down a little bit, but talk about physical silver, totally different story. Premiums are actually rising. And then platinum, slightly off from last week. Palladium trading sideways as well, very similar to platinum. Where do you want to start today, Miles?
I feel like we should start at gold because we are a precious metals podcast. However, part of me wants to start with Avis Rental Car Company. That's sort of where I want to start this show this week, and I feel like we almost kind of have to.
That's probably the biggest news in the market.
That is the biggest news in the market. So thumbs up to traders and probably Wall Street Bets and whoever else got involved in the Avis play, because we're looking at massive move up in the transports. I mean, the transport average had like, a 1,300-point swing to end it there in a couple hours. Went from 17 to over 18,000 and then back down to 17, and that's where we're sitting now. So transport average has gone nuts since October 1st. We've had an exceptional move up in the transports really since the beginning of last month. You're talking 30% rise since October 1st, and we're at a 20% rise now.
Just have to point out there is a huge gap in the transports right around 15,000. So
yeah, shocking.
We'll see what happens.
Markets die with exuberance. So I don't know if this is the exuberance that's killing off the transport market or not. You never really know because obviously the long-term trend remains bullish. Long-term trend in the Dow Jones remains bullish. It's real hard to be bearish when Yellen's talking about $1.3 trillion spending plans. And despite taper talk this week in the Fed minutes of cutting our monthly spending from 120, 30, 140 billion every month down by 10 billion, tapering back slightly. That doesn't change anything. That's lip service. So the spending shall continue. The beatings will continue until morale improves. Morale hasn't stopped improving, or at least the value in the equities market. So we'll see what happens going forward. Yeah, I guess birthday cake for the transport average, putting in a brand new all-time high. Little sarcastic party here in the studio.
Birthday cake, you want to eat it too? I mean, let's jump to silver. Okay, you've got the silver spot price that has moved lower. Not significantly, but has moved lower since last week. So currently around $23.50. How about you want to buy actual silver? Let's talk about what you're going to pay for that.
Yeah, that's been pretty consistent.
It's been that way for a year and a half where we've had abnormally high premiums on silver. So the silver spot price is not telling you the true story. Silver spot price bouncing around a little bit. Well, if you want to buy actual silver, you're going to pay $3, $4, $5 over the spot price easily. And on some products, even like old junk silver, pre-1965 dimes and quarters, it's over $30 an ounce.
Well, so, even 100-ounce bars are almost there.
100-ounce bars. So when you're looking at these markets, especially with the metals market, since that's what the show focuses on, you want to look at what are you getting? Well, the spot price is moving around a little bit, up, down, here, there, and the actual deliverable products are showing the true demand for people wanting the actual silver. You're going to have to pay a lot more than the spot price to get them.
Yeah, we're definitely seeing more stability in the physical market than we are the paper market, which I guess technically you should, right? Like a car should maintain value a little bit better on a day-to-day basis than like Ford Motor Company stock would. So it does make sense that silver's there, but like you're pointing out, and like we've been talking about for a while now, the reality is that stability you're seeing in the silver market is at $30. It's not at 23 or 25. And it's been a year and a half, and availability is out there. The mint isn't running massive delays unless you want to pick up hundreds of thousands of coins. There's a legitimate supply-demand pricing in the physical market that is very different than the supply-demand pricing you're seeing in the ETFs and the spot price and the futures and options market, and it's continuing. So one of the two is going to break. And even looking at the spot price chart, we're sitting in the same sideways trading range we've been in for 18 months. So we're looking at a long-term primary trend bull market in the silver with an intermediate-term retracement period that really hasn't done much. We've been sitting sideways. We've been putting in these longer-term higher highs, higher lows. Now, we did have that break down below kind of a rising floor that you can see on the chart here, but we didn't actually push below the previous pricing, so we're still in the same sideways trading period. Generally, my understanding in markets is reversals tend to happen pretty quickly. So the longer silver just sits in this trading range, the more likely it is you're going to see that inflation push it up over the next 6, 12, 18 months. And my big fear is with silver at $30 right now per ounce, spot price at 25, what happens when spot price is 45 or 50 on the next leg up in silver? Are you paying $60, $70, $80 an ounce for a coin? Because when you have that type of price move and you get a large increase in the demand for silver, the product's going to dry up pretty quickly. Do the premiums come back down to meet $24, $25 silver? Or if we see silver take another leg up, is it going to get even worse?
I think silver's ready for another leg up. You could look at something as basic as the daily chart on silver, and you have this beautiful upside down head and shoulders pattern on the daily chart of silver. I think silver is preparing itself for a huge rally, whether that's in the next 2 weeks, it starts that, or before January. I think you're within a few months, if not a few weeks, of silver taking off. Then, of course, with gold and silver moving together, I think gold's ready to do that too. We may see a little bit more weakness in here before now and the end of the year. That's totally possible. And there are some lower levels that it could come down to, but take a look at this beautiful upside down head and shoulders pattern. And all this potential energy is leading toward a massive rally. We're on the verge of it.
Well, and Robert, I think you're seeing the same thing in the gold. I think the gold is seconding that, especially the time frame. Because if you look, again, we're looking at a long-term primary bull market trend with a short-term correction period, intermediate-term correction period in the middle of it. But look at this 18-month wedge compression that we've had, this declining ceiling trend line with a flat base floor, and we're running out of real estate here that we can keep trading in between. We're at the top end of that trading range now, probably on our way back down towards or near the bottom, but maybe not. Eventually, we're going to break one of these trend lines, and you're going to see gold move towards whatever the next stopping point is, whether it's 3,500 or 5,000 or 10,000, and probably a couple steps along the way. But we're seeing the same thing in silver. We're seeing the same thing in gold. It looks like the end of a consolidation period. And generally, when you end a consolidation, you're going to resume the primary trend. And in gold and silver, we're looking at this primary trend that began a couple years ago. Short term, sure. Gold last week came into a top. We're at the top end of the trading range. We had this little short-term 618 correction, but it's bounced the numbers and come right back up. We're still sitting right around $1,700-$1,800. Same sort of price average we've been at since around September of 2020, a year ago. So that's a consolidation. This is why we get on this show, and from time to time when we see these price moves down to the bottom end of that trading range, we say, hey, pick up a few ounces. It's not a bad idea. Seeing the same thing in silver, we're seeing in gold, and then platinum, of course, never really has looked bearish. Platinum seems to just be lagging behind the other two metals, but taking these stair steps up again on the long-term primary bull market trend. And we're seeing the same trend playing out in the equities market as well. And it's all coming at the expense of the US dollar and the expense of the bond market and the expense of interest rates. And we're just creating money, pumping it into the system, and building up all of these markets that are just eating that available currency up. I sometimes get asked, hey, when's the stock market going to crash and gold's going to skyrocket? Well, those two things don't necessarily have to happen like that. The less valuable the US dollar gets, the higher the price you're going to see across the board.
Yeah, and without sounding like a used car salesman, I want to throw in there that a lot of people look back on something and say, oh, I missed out. I should have bought that. I knew I should have bought that at that price or what have you. I think you're going to have regret come March, April. I think you're going to have regret if you're not buying metals right now. And come a year or two into it, I think you're going to have huge regret if you're not loading the boat with metals right now. Yes, we sell metals. Yes, we have a bias towards metals. But objectively speaking, we can lay out a lot of technical factors here with the charts. We can lay out a lot of fundamentals. The case is there for buying metals. And I think you're going to be paying higher prices if you're not buying it between now and the end of the month. I think you have 45, 60 days before you start metals with a new higher rate, with a new leg higher in the prices. So that does it this week for Gold and Roll Radio. You can find us on Twitter at ICA Gold, like us on Facebook, McIlvaney Financial, hit the subscribe button below, give us a call, 800-525-9556, or peruse our website, McIlvaney.com. Thanks for listening. Have a great week.